Welcome to this session on inheritance tax, the key rules and traps for the unwary. This will look at the primary inheritance tax issues arising for probate practitioners during the administration of an estate. It's two sides of the same coin, really. We'll be looking at the key issues and principal elements of inheritance tax, and then we'll also be looking at some of the traps for the unwary, things which can go wrong quite easily, things to avoid. Before we go any further, little few words about me. My name is Peter McGowan, and I'm partner and head of the Wills and Inheritance team at Clifton Ingram Solicitors, with offices in Wokingham, Farnham, and Reading. 30 plus years experience in the law, and specialise in inheritance tax and estate planning, capital gains tax planning, will drafting, and contentious inheritance. But what it doesn't say there on the slide is that before I became a solicitor, I used to work for HMRC Capital Taxes, or the Capital Taxes Office as it then was, of the Inland Revenue, specialising in inheritance tax. So I'm a little bit of a gamekeeper turned poacher. Anyway, next slide, we'll be looking at, as I've mentioned, some of the important traps for the unwary to be avoided, and some of the important key inheritance tax issues for probate practitioners during the administration of the estate. The webinar is suitable for junior accountants as well as lawyers. Not least, of course, as many accountants now are involved in the probate process. The principal areas to be covered are the key rules of inheritance tax, the effect of lifetime gifts, the liability for inheritance tax and who pays, which can be sometimes quite a complex and difficult issue, responsibilities of executors and administrators, assets which are exempt or partially exempt on death, including the effect of business property relief and agricultural property relief, both of which are hot topics at the moment, the treatment of trusts in calculating inheritance tax liabilities on death, post-death variations, HMRC investigations, and finally, once the estate's finished, obtaining inheritance tax clearance. So next, I think let's have a look at what actually inheritance tax is. It's a tax charged on the estate of a deceased person on assets owned by that person above the inheritance tax threshold, currently $325,000, which, as we know, in the last budget has been frozen for several more years and has already been frozen for more than 10. Almost uniquely amongst European countries which charge an inheritance tax or a similar levy, the tax is charged on the estate of the deceased person and not on the beneficiaries. Beneficiary-based taxes enable the taxes charged to be adjusted depending on the closeness of the relationship between the deceased person and the person inheriting. So that, for example, frequently children will pay a lower rate of tax than more distant relatives. Such nuances are completely ignored in our inheritance tax, which charges a flat rate above the various thresholds of which we are aware. And this can, for example, cause great unfairness in large families where HMRC may actually receive more in tax than any single beneficiary receives in their inheritance. And I have seen that actually in practice. It can be very unfair.